Hello and welcome to my new YouTube video about fair value gaps. So first of all, what is a fair value gap? A fair value gap is an imbalance in the market. So we can have bearish or bullish fair value gaps, and I use this for entry or for my bias. So now that we know what it is, let's draw a fair value gap for you guys that you know how you can find them on the chart. So our fair value gap is a 3 candle pattern. Boom. These look horrible, but who cares? So these are all candles right there. Boom. Boom. So we have 3 candles, and so the name is kind of already telling you guys what we have here. So a fair value gap, you see we have a gap between this wick and this wick, and then you're going to mark your fair value gap from the top wick, from the third candle to the first candle's wick, and then mostly price comes into this area and moves higher in this case, or we move past it, fill it, and then go lower. That's called an inverse fair value gap, but we get to this. So on the chart, we can find fair value gaps. So first thing here, this is fair value gap. So this got not filled, and we don't gotta retrace back into this. But I want you, if you're watching this video, just pause right now and just find yourself 4 fair value gaps on your chart, and this is also one. Just go around and make this little step, and then we can continue. So if you now did this, we're going to see how we can use them in the market. So let's go over a trading day which we had. I think it was on ES right there. So yeah, here. So we had a liquidity sweep of these highs, then we came down, we saw we are forming a 5-minute fair value gap. Right here we see 1 candle, 2 candle, 3 candle, wick, the gap. Then we can scale into the 1 minute. We can see, I know on the 1 minute it shows that we are closed above, but you always gotta rely on the chart where you marked out your fair value gap. You can see we didn't close with the body above it. So we see the 5-minute fair value gap getting filled, and then we can use almost the same confluence again for our entry. So this here right now is a bullish fair value gap, and as you can see here, we're closing below it. So we are in a bearish downtrend. We fill a 5-minute fair value gap, and inwards a bullish one. So that means we are very likely to go lower. So we can enter off here, put our stops there, and yeah, I don't know, aim for these 5-minute equal lows. I don't know, not the best RR, but yeah. You could also have waited, bro, for this to get inversed, and then you see we get another fair value gap right here, and then you entered off here for a much better risk to reward. boom. Yeah, this is something we can use for our entries and for our daily bias. We can also use them. So as you can see, on Thursday we filled in this Ferrari gap right here, and then we moved higher into this new week opening gap. Then here on Wednesday last week we filled in this 4-hour Ferrari gap and moved higher, and on Tuesday we filled in this Ferrari gap to move higher. So you can see you can also use them on bigger time frames to know where price likely wants to go. And yeah, I hope you guys learned something from this video and that you can apply this on your own trading, and thank you for tuning in.